Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to dive deeper into the currency pairs and the basic strategy for me, the US session, but obviously the criteria fits regardless of any session that I'm trading. I look for specific criteria to identify the best instrument in that session. We're specifically going to be talking about currencies. Okay, and we'll be reviewing some concepts in the playbook that are critical to understanding the type of setup you're looking for if an instrument triggers an opportunity in the session that you're trading. So again, reviewing the timings for the currency pairs, Asia, the 7 p.m. New York time is when I will look for an opportunity to begin, or towards the end of that hour heading into the 3-hour window. The same goes for the Europe-London session. Now, I'm not trading that anymore as I'm in North America, but the importance of understanding that is critical because obviously the London equity hour, 3 to 4 a.m. And then the New York session time. Now, this is a key time for me for the currency pairs, 7 to 8 a.m. That is often an opportunity if a market has broken out, or if we have a previous daily level broken. That is the time when markets can begin to offer us an opportunity heading into that US window. So again, that's on page 27. Important to review that because and this is specifically for currencies. This does not apply to gold, oil, or the indexes. However, there are certain days when that criteria will also be met on those instruments. Now we'll look at the Japanese yen first. We'll do this specifically by itself, and we'll break the components down into the process again. We had a high of the week on Thursday. Friday, therefore, was our day 2. Day 1 is our Thursday because we have a breakout at the high of the week that failed, and that begins our day count on the way back down. Friday broke the low of Thursday's session and then closed as a breakout day. So reinforcing again, understanding who is in the markets. We have day 1 shorts in the market. Now we just talked about the 3 things that markets do. They break out, they pull back, and they trend. They break out, they stall in reverse or have a failed breakout reversal. Or they trade back and forth between a high-low level in a trading range. So we have breakout traders in the market. That is a trigger. That is a trigger for me. Day 1 breakout traders are in the market. Now we work from the previous day's highs and lows. We have a market in breakout. This was an excellent opportunity in the Asian session for traders who were trading the Japanese yen. Now, you've heard me say this again and again. There are only 2 types of trades. There are pump and dumps or dump and pumps. Our universal entry criteria is met and gives traders 2 opportunities to enter the trade. First, to either take money off on the break of the new daily low. So the first short trade taken in that hour between 7 and 8 p.m. gives traders an easy 25 pips. The 3-hour window opens and pumps up 1 push, 2 push, 3 pushes, and then breaks down again and gives us a second entry for another 25 pips. Now, we don't talk about this in the playbook a lot because I wanted to simplify things for traders, but you'll also notice we have major round numbers, double zeros and 50s. We have 25 down, the pump up again above the quarter level, and the collapse back through the low of the day again down to 50. But the first important thing to understand was that I had a market that was in breakout. This breakout level then becomes a potential area for the pump and dump to fail heading into our window, and the collapse for the easy 25 pips through the low of the day. The second entry is the same trade in a continuation in a low-hanging fruit opportunity, which essentially they both are, high of the day, but it's a low-hanging fruit continuation trade. And the second entry back through the low of the day. But I repeat, we have day one shorts. Day one breakout traders are in the market. That breakout pulls back and continues the move down. Now, heading into the Europe-London window, we have a break of structure on the inside. We have higher highs and a higher low. Now again, this higher high and higher low on the inside, you'll notice, is a breakout also of a 25 pip box. But the higher high, higher low break in structure heading into the session begins the dump into the low of the day, the low of the session. And the engulfment pin hammer and our universal 5-minute entry criteria is met at the London Open for the move back up through the high of the day. Again, timings, higher high, higher low. We won't talk about front side, back side in this video. I'll add that video into the resource library, because when you understand front side, back side, the entry at the London Open gave traders again an easy 25 to 40 pip move back up through the high of the day. Now when we come to our US window, again you'll notice that move down started in the 1 a.m. window heading into the Europe Open. The move down started in the 7 p.m. window heading into the Asia Open. We have a market that has taken out the high of the day, the current day. When that happens, we redraw our level. That is the high made in the London session. We now have a market that, as we head into the 7 a.m. New York session window, puts a double top and an engulfment, and our universal entry criteria on the 5-minute model is met at 10 minutes to 8 a.m. for the short trade back down into higher level longs, low hanging fruit back into the quarter level for another easy 25 to 30 pips depending on where traders got filled. And again, on all of these trades, it's a 1-bar stop because they should explode and move quickly in the direction of the trade. Now these are all right out of the playbook. These are all met specifically based on our 5-minute entry criteria, which again is on page 29 in the playbook. Now I need to reinforce too the understanding that these trades are scalable in size. And again, your risk is controlled, your profit target extracted. These are repeatable setups. So it's not about how many pips, it's the quality and the type of setup that allows you to scale into this opportunity, take the money, and then be done for the session, whether you're trading Asia, London, or New York. Now, the other thing to notice about this Japanese yen trade is that the market also came up from 50 to 75, 75 to double zeros, and not quite all the way to the quarter level, but it's in the third level of rise. And the timing window gives us our entry after the high of the day is locked in for the easy collapse through the low-hanging fruit back into traders who are long in the London session. These trades are specifically textbook trade setups right out of the playbook. So I reinforce the simplicity of looking for easy trades, paying attention to the timing window, and then knowing how this should behave. This shouldn't be coming back into your position. Now this is specific for currencies. But again, coming back to our first criteria, we had breakout traders in the market. We had a breakout pullback for the continuation trade in the Japanese session. We had a break in structure that became a dump and pump for traders who were chasing the short trade. And the short squeeze reversal on the front side of the move again on our universal 5-minute entry criteria that came up 3 levels of rise worked into the high of the day for the engulfment, pin hammer, and the collapse into the U.S. market session for an easy, scalable opportunity that will repeat again over and over and over again. This is the easiest way to trade these pairs. So keep it simple. Focus on these best opportunities. We'll review the other pairs in separate videos, but I wanted to specifically address this Japanese yen. Day 3, we have day 1 breakout traders in the market. It's Monday, the beginning of a new week. We have the pullback continuation short trade in Asia, the reversal trade in London, and the low-hanging fruit into the higher level longs in the U.S. session. Keep it simple, traders. Focus on the playbook. Go back and study these and understand the importance of the timings, the setups, and remember there are only 3 types of trades. 2 types of trades. Pump and dump and dump and pump. We'll see you in the next video. Have a great day, and may the markets go with you.